Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. If you're serious about mastering breakout trading, then you are in the right place. In this video, we are going to be diving deep into breakout trading indicators. Alright, so basically, we are going to be looking at the tools or the indicators that you need to identify breakout opportunities and stay ahead of the market. So as we get into what we have for this video, you might want to get your notepad because we're going to be covering everything from moving averages to Bollinger Bands and even some tips on how to use volume indicators effectively. All right, let us get started. First off, let's talk about moving averages. Okay, so I'm going to be adding the moving average to the chart right away. Right, so this is the 50 EMA. Okay, moving averages are one of the simplest yet most effective indicators for breakout trading. Okay, they smooth out price action and help you identify trends more easily. All right, now for breakouts, the exponential moving average is particularly useful. As you can see, it was the exponential moving average that I added to the chart. This is the 50 period exponential, the MA method. The MA method is exponential. Apply to close, and then you can select the style that you want, and this is it. So EMA is an effective category of moving averages when it comes to breakout trading. Okay, here's the trick. When the price breaks above or below a significant EMA, for example like the 50 EMA, it could signal the start of a breakout. All right, so in this example we can see that the price was in a sell trend. Right, this was a very evident bearish trend. And then when the price finally broke above the moving average, you can see that initially the moving average was serving as a dynamic resistance. Okay, we had a false breakout here though, but we can see that right from the start of this sell trend, after this bullish move turned into a bearish move, we can see that initially it was a bullish trend, and then we had a bearish breakout here, and then we had a bearish trend all the way down to this place, and we finally had a bullish breakout and the bullish trend commenced. Okay, so when you have the price break above the moving average, essentially you have a new trend forming, which is going to be a bullish trend. Okay, and it's going to be a bullish breakout. And in the case of price dropping below the moving average, then we call that a bearish breakout if it was formerly a bullish trend, right? If it was formerly a bullish trend and then you have price breaking below the moving average, as in this case, then we call that a bearish breakout. Okay, now make sure to adjust your settings based on the time frame you are trading. All right, a shorter EMA like the 9 or 21 works well for short-term traders. All right, so if you are trading on the 15-minute time frame or 5 minutes or 1 minute, you might want to use a smaller period time moving average. All right, however, longer term traders can make use of the 50 EMA or the 200 EMA, for better signals, right? Or for more longer term signals. Now let us talk about the Bollinger Bands. Okay, let's talk about the Bollinger Bands. Right, here we go. Okay, so the Bollinger Band is an amazing indicator for spotting breakouts, right? Bollinger Bands measure market volatility and provide a visual representation of price extremes. Okay, so here's what to watch for. When the Bollinger Bands contract and tighten, example in this scenario, we can see that within this zone, right? Within this zone, we had price consolidating, right? And the Bollinger Bands, we are tightening within this zone. Okay, so the Bollinger Band shows you period of volatility. It helps you to identify periods of volatility, market volatility, when the Bollinger Bands are tightening, it shows low volatility. But when the Bollinger Bands are widening apart, like what we have here, it shows that there is an increase in volatility. All right, you can see what happened here. This shows that there was an increase in volatility. All right, now when you have a Bollinger squeeze, like what happens here, a Bollinger squeeze, the tightening of the Bollinger band, it's known as the Bollinger squeeze, right? This indicates low volatility and often precedes a major price move. All right, so we can see that in this scenario, there was a Bollinger squeeze. There was, because we can see how the Bollinger band got started tightening, and just shortly afterwards, we had a breakout, all right, which the Bollinger band identified by widening apart. And this is another example. Right after the tightening, after the Bollinger squeeze, we had a bearish breakout again. And you can see that the Bollinger Bands indicated that by widening apart. Okay, so a breakout occurs when the price pushes beyond the upper or lower band. All right, but be careful, breakouts can sometimes be false. Okay, so that's where confirmation from other indicators or price action becomes crucial. Okay, now let us move on to volume indicators. Okay, so I'm just going to be adding a volume indicator to the chart. All right, so volume is an essential component of any breakout strategy. Okay, when a breakout happens, you'll often see a spike in trading volume. Why? Because more traders are entering the market, pushing the price further in one direction. Now, one of my go-to tools is the volume weighted moving average. Okay, so I want to add the volume weighted moving average to the chart right away. It's the VWAP for short, volume weighted. Sorry, not the VWAP, the VWMA. The VWMA is the volume weighted moving average. But the volume weighted moving average is just one of the volume indicators that we have. All right. You can either use the volume weighted moving average, you can use the unbalanced volume, you can use the volumes indicator itself, you can use accumulation distribution, you can use money flow index. All right, so that volume weighted moving average as a custom indicator would require to be downloaded before uploaded to the chart. Okay, so for the sake of time, let's just use another volume indicator. So in this case, I'm going to be using the volumes indicator. All right, volumes. So we just want to identify increase in volumes during breakouts. Okay, because when a breakout happens, you often see a spike in volume. All right, so now we can see that using this volumes indicator, we can see that when there was a spike in volume, when there was a breakout rather, can you see that there was a spike in volume? This long bars shows volumes, right? You can see that the price and the volume of the trades, the volume of market trades, it increased. You can see that there was a spike around here. Okay, then let's look at another breakout that happened. Okay, there was a breakout here. Can you see the spike in volume compared to the previous levels? See, there was a spike in volume around here. There was a spike in volume around here right after the breakout, right? There was another spike in volume around here right after a breakout. Remember that breakout precedes a Bollinger squeeze. Okay, you can see that. All right, and combining the moving averages as well, you can see that at this point we had a breakout both from the moving average and from the Bollinger Bands. Here again, both from the moving average and from the Bollinger Bands, we had a breakout, right? And here again, both from the moving average and from the Bollinger Bands, we had a breakout and there was an increase in volume. So basically, combining volume analysis with candlestick patterns and the other indicators like moving averages and Bollinger Bands can be really effective in identifying good breakout opportunities. Okay, now here's the key takeaway. Using one indicator is good, but combining multiple indicators is even better. All right, so for example, you can pair the Bollinger Bands and the EMA for added confirmation. Okay, and then you can use the volumes as well to confirm the breakouts. All right, if the price breaks out of the Bollinger Bands and crosses key EMA, it's a strong signal. So also always remember to check the overall market trend. All right, is important. because breakouts that align with the dominant trend are usually more reliable. Okay, and that is it for this video. I hope you found this breakdown of breakout trading indicators really insightful. Remember, mastering these tools takes patience and practice, so don't hesitate to backtest your strategies on a demo account before going live. If you found this video helpful, please give it a thumbs up. It helps the channel reach more traders like you. And if you haven't already, subscribe to the channel for more actionable Forex trading tips and strategies. Hit the notification bell so you don't miss out on future updates, and drop a comment below letting me know which indicator you will try out first. Thank you for watching, and I'll see you in the next video.